The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, folks. Basil Chapman, Monday to Friday, 11 o'clock till noon. We have the Tiger Technicians Hour. What's the number? 877-927-6648. Love to take your calls. And let's go to the numbers. I got the Dow down 20 at 18,193. You got the S&P at 2110. You got the comp index, if I can just move this away, that's the E-mini futures, and you've got them down 1, the E-mini futures, 120-minute chart. Look at that. Rectangle formation can keep you in a trading band longer than your patience, and you've got the comp index now down 3. Comp index is down. Comp index is down 3 at 49.64. You got the VIX index also down 50 cents at 13.41. Isn't that interesting? Buying is still prevalent. Most importantly, you've got gold. If I can just move this a tad, and I'll give you all these numbers. Yep, you've got, I can just move that. That's even easier because that's the futures right there. Let me expand that a little bit. Give me a second. Right there. All right, you've got gold up 7 at 12.17. Silver's down 9 cents at 16.61. Most importantly, you've got crude oil, which is just trying its very best to rally. It's at 49.23. We'll look at it in a short while because what we want to see is how does the 48, 47, 46 area stack up? And let me just, what happened is that, there it is. How does it stack up in terms of support? Is there a chance that crude oil is getting close to some kind of rally? Is gold trying to start a base here? Is it forming some kind of a base? What about the dollar? You know, that rectangle formation I always talk about that can try your patience and you think it's going to break out, so you buy it, but that's almost always what happens is you want to short or sell at the top borderline of the rectangle, and you want to be buying at the lower until it does something else, until it stops going in that go-kart, not a go-kart, bumper cart, the bumper car, back and forth between the trading band. Okay, so now we've got the crude oil. I'm just going to show you the chart right now. Crude oil. Where am I going? What did I just hit? Okay, crude oil at CL. Yeah, you'll see what I'm talking about. Look, see that little trading band there? And what I said is the close into the 47s really suggests that it's going to test 46. And you've got, I can move the 120-minute chart away a little bit there. I'll move that away and show you what's happening in the week. You remember the arch formation, the lowercase h? Maybe in the break I'll get my CD introducing the Chapman Wave methodology out and show some of these patterns. That H, that can go on for a long time. The lowercase h can go to a lowercase m. Let's move on. We've got TLT. Now the TLT, I suspect, is forming some kind of a lower boundary range, and I'm not sure where that sound is coming from, so I better just check the sound here. Give me 1 second because it might be picked up by the mic and that'll be interfering with things. No, that's off and that's off. Okay, so if you're looking at the TLT at this particular point, what you'll be seeing is that I've already drawn the H to the lowercase m pattern in the daily, and we'll see what happens next week. I am anticipating that the market is really struggling yet to break. The Dow and the S&P are struggling to break out. We've got a PT. I haven't gone through those. I'm going to go through them in a moment. But most importantly, what we've got is the chance for bonds to have a little bit of a bounce as the market kind of weakens. Money flows back into bonds. But then we start that leg D up later next week. It's a kind of, I don't want to be a forecaster. I'm just saying, talking patterns, that there's a chance that we have a pullback for 3 days, and then it takes all of Thursday and Friday of next week to get back to the new all-time highs, and that actually works out the following week. But if next week the Dow or the S&P make new highs, it stalls a leg D in the S&P for yet another week into the third week of March. So this is what I'm looking at. TLT, I just discussed, and we've got the 120. I think the 126s to 125.5 is going to be really important support to hold. And there's a chance that you're going to have a break to the upside above 130.38 this coming week. That's what I'm looking at. So now let me just finish up with a couple of things here. You got the dollar. Dollar had a fabulous move yesterday. What has it done? The rectangle formation. Remember, rectangle formations are formidable in terms of your patience. When they break out of that borderline decisively, that's very important. When they break down in the bottom part of the borderline, that's very important. And look, there's the weekly chart. I've been saying this now for almost a month, that we're going to be in a trading band. And I can't believe it. We're still in the trading band. We haven't broken out. Same with the euro. Look at the euro. Euro-dollar currency pair, it's pulling back in the H formation, but it's still within the trading band of the upper part of 1153 and the lower part of 1109. And that's it. So I'm going to go straight to our first caller. We've got Sam in Philly. Sam, how are you?
Hey, Basil, how you doing? Happy Friday.
Good, thank you. Yes, happy Friday.
I'd like you to look at Johnson & Johnson. Yes.
Now, I did you call and we were looking at this to see what the trading levels were?
I'm actually in it at $98.
Yes. Okay. So I think that's why I remember having a look at it, and it was breaking down. There was a candle that I said that you cannot, in this particular candle, that was the candle of the 12th of February, Johnson & Johnson, J&J, trading now at 102.80, had to hold 97.90, because if it started to trade for a few days, a few hours even, in that area, there was a real good chance that it would retest the low of 97.15, probably break it, and then we'd have to reassess to see whether it's now going to have a rebound. Instead, it's made a really nice V-shaped formation. This is a defensive stock. Johnson & Johnson healthcare and drug manufacturer, made a peak F doji top in the monthly chart. Where it closes today at 4 o'clock is going to be really important, because if it closes just a tad higher, it's above the 9-period moving average. But if it closes by the end of the day towards the 102 level, I've got to watch this real closely to say, hey, this is the first time that you've had 2 monthly closes below the 9-period exponential moving average after turning that incredible black line right there, that moving average, into support the month you broke above in June of 2012, when you went to 60, from 61.71 to 67.56. Not once have you closed. Twice you've gone under it, but not once have you closed below it since you went to the peak F top in November at 109.49, and then all of a sudden you came back down, and then last month, that's February, and this month you've been under it. So it's kind of important right now. But in the meantime, you've got a really nice trade, because you're up a few points. You're above the 200-period exponential moving average. If I had to draw what I call the arch formation, it's more like a V, but I'll call it an arch formation right now. Let me get the right side. So just, can you tell me, do you follow this often? Is this a stock you've been in before, and that you were out of it and you want to get back in?
I have like a channel. I have like a parallel channel. So anytime it goes down to that channel and starts breaking up again to hit the upper channel, I get in, and then I evaluate at the higher level, get trade, and wait until it goes down again.
Okay, so folks, let's go through that, because what Sam just said, that is just fabulous to have a plan. Now, the channel is based on the daily chart.
The channel actually is based on the daily chart, and it actually conforms to on the weekly chart.
Okay. Yeah, it would, because it's been in that channel for so long. In fact, I'm going to draw it right now. At least I don't know if this is the same. I've actually got the pattern that I call the falling axe, and that's an expanding wedge-shaped pattern. And that is actually a more powerful one than just a plain old channel, and I'll explain why. If Johnson & Johnson, a defensive, that's got nothing to do with Raytheon. When I say defensive, it means in the category of labeling stocks in categories. This is a stock that in the cyclical stocks have a different kind of a cycle to the defensive stocks, because the defensive stocks usually do very well in an environment where they are both dividend paying higher than what you could get elsewhere, as well as stocks that when the market tends to go down, they tend to be favored for both the dividend and also because a stock like a Johnson & Johnson, which really is kind of household health products and things like that, people don't stop buying those during bad times. Later in the recession type era, they do come down like everything else, but they often hold very, very well. So that's the stock. So you've got it both for the dividend and the fact that you've followed it for a long time, you've traded it for a long time, and you pretty much, well, know the channels and the support lines, right?
Right. See, my weekly tells me like the lowest channel was 99.50 and the highest one is 114. But, you know, as it keeps going above near 106 and 109, which is the previous high, I got to watch it and see the volume.
Okay. Now, here's the other thing that I'm going to look at. In the channel, I have the 103 to 104 level as kind of the level to break out. I also have it as what I call a left side, right side price time match in the daily. And I'm going to show you something. If you're able to watch Tiger TV, I'm going to show you something very interesting. I'm going to make that dashed line. I'm going to make it pink.
I also have it.
And you're going to the thing. So if you can just turn the volume off, but at the same time watch the chart, I'm going to show you something really interesting. In my work that I do with the left side, right side price time measured move in this cup formation, to be very strict, I'm going to the plumb line of the low. I'm going to the high of the bar. That is the bar of the 16th of January at 104.62. I'm not going to the top of it just yet, but I am going to the plumb line, the low bar of the 12th of February. Then if I go to the right side, it looks to me that I've made it a little bit too long. So then what I would do is I'll say, hey, you know what? Choose a candle that's really important, and I'll choose the one next to it and brings it a little bit closer. So and that would bring it to about the 9th of March. So this is what I'm looking at. If this pattern continues, then we're looking today as a possible peak B. If it doesn't go above 103.18, the high today is already 103.17. Certainly could do it by the end of the day. But I've got a price move that's saying you've got very strong support between 102.22 and 101.37. But what's really important about this is that the MACD and stochastic are good. We've got a break. Are you able to hold through the break?
Sure, yes, sir.
Great. We've got salmon fillet, and this is a great stock to be looking at right now in this particular moment. It is Johnson & Johnson, and I'll be back. Dow's down 22, S&P's unch. I'll be right back. Basil Chapman, Tiger Divisions Hour. This is Technical Friday, and we're getting to those as well, the technicals of IBB.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. We'll take your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. Basil Chapman. So this is what we're looking at. We're on with Sam in Philly from New Jersey, and we're out from Philly. Yep. Not New Jersey, from Philly. And we're looking at Johnson & Johnson up 8 cents at 102.88. JNJ is the symbol. Now, what's really important about this is that it's got a slow move to the upside. Now, Sam, I have to congratulate you. First of all, I would not have bought the stock for two reasons. One is the candle and the way it struggled at the 9-period moving average going to the low of the 15th of February at 97.15, the way it kind of hugged that line until it broke out, it looked to me like it could do a retest, number one. And number two, because so many cyclical stocks were actually doing quite well in this particular phase from mid-February into where we are now, I would have thought, gee, Johnson & Johnson were at a peak F in the monthly, possible peak F/A but more likely F in the weekly chart, and yet you've done really well. So I congratulate you on your technique. Now, there are the two things that I'm going to be watching. It's holding really well right now, and it's saying to me, fund managers are very quietly looking at this as a defensive play and as a stock that has historically done very well. And it's held the support in the 97 area nicely, and it's now gone above. They'd be looking at the 200-period SMA, which is this line right here, and that coincides exactly as the 9-period moving average was crossing up, and it is a little bit below the 200-period EMA, which I love to use. And now it's above the 200-period moving average. So the first thing is the MACD, the stochastic are doing very well, commensurate with the price. I love that. That's really good. Number 2, I've got this left side, right side. More conservative says the 9th of March. Actually, if I did it in a different way, I would get this line right here and would say that probably by early next week, by Tuesday or Wednesday, we'll be tackling the 103s. 103 to 103.75 area. If that happens, that's really good. And if it happens that today you can just squeak above 103.18, that extends leg B. That means you still probably have C and D to go. The weekly chart, that's another thing. So you have to have the daily to start having the weekly improve. The only thing I would say to you is that if it closes under 101.30 to 101.00, that support level, and it holds under it for more than 2 sessions, I'd be a little careful, because that's what that's saying is, yeah, you were right, that H pattern is going to take, that's the form that I would have expected. And if it breaks out into the 103.50s by Tuesday or Wednesday, you're the one that has just nailed this beautifully. Those are the parameters, and I would prefer to do it just one step at a time and say you're on the daily. The daily looks very good. First thing that we looked at was the fact that fund managers seem to be buying it because that's the action above the 9-period moving average. The second is the confirmation that all the technicals are confirming leg B should go to leg C, and that's good in the daily. The weekly chart, I would say if you can, give me a call next week, maybe Tuesday or Wednesday, and then let's look at it in terms of the weekly. But the 120-minute chart says it's right at 200-period moving average. It's just above the resistance of 102.58. It's at 102.61. So expect just a little more time hanging around here to see whether it decides to make that line of 102.50s a resistance or a support level. That's all. But so far, you're the master of the trade. I have to congratulate you, and I like what I'm looking at. And hey, let's see what it's doing in a few days' time.
Thank you, sir. The reason I bought it because of the channel has been going since 2012.
Yes,
so
yes. This is.
I'm like, it's always, every time it's proven itself. But you're right. If it goes down to that level you were talking about, I might take my profit and evaluate and buy it later on.
What I meant to do before was to show the trend line that we're looking at, and that trend line, if you do it on the weekly and you take it from the low bar of the 14th of February of 2012 to the low of the week of the 17th of October at 95.10, it came in exactly on the trend line, exactly to the tick of 97.15 on the week of the 13th of February. So that trend line held beautifully. So once you've got that kind of confirmation in place, yes, now I think that the weekly, if it closes above the 9-period moving average today, that's a really big step. Congratulations. Very nice, Sam.
Thank you very much, Basil. Do you have time for another one, or?
Give me the name.
And then listen, right?
What name is it?
It's Sangamo. It's SGMO.
SG, Sam, God.
George, Mary, Oprah.
Got it. Okay, I'll look at it very soon. Okay, thanks for calling. We'll be back, folks. Basil Chapman, and the Dow's down 39, S&P down at 157.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, we're back. So now I had a whole bunch of questions and some emails, and all pertain to pretty much the same thing. Hey, it's the question that I'm asking as well, and I'll do it one at a time. The big thing is the QQQ series. Is it in leg B? Yes, it's in leg B, and if it's today, there is a... if it holds as it stands right now, that the high yesterday was 108.94 and today is 108.91, there's a chance that we have a Chapman Wave 2-bar reversal in place. Normally, I look at those where I'm expecting a top from a D, E, or F. I also tend to like to find round numbers. There aren't any round numbers here. But most importantly, the signal from the MACD says, hey, don't get too carried away about shorting or anything like that. There is tremendous strength in the QQQ series at this particular point, whether it's through the IBB stock, whether it's through all of a sudden you've got Google acting. Well, I'll look at Google in a moment. Someone asked me about Google. Just a bunch of things that are saying, be careful. Now, that's number one. Number two is the stochastics at 96% and still very flat, and the on-balance volume has only gone to a B, coinciding with potential peak B right here. So that says that next week there should be higher highs. Well, what does that do? It says that in the weekly chart, although I had a down arrow for the 106.25 high back in November, December, 105.92, back at the 106 area. Yeah, the 106 high of the week of the 28th of November, there's a cup formation with a breakout. So I'm suspecting that this, I'm going to keep calling it E/B in the weekly chart. And I don't have to do any worrying about whether it's an E or a B because it's the daily that leads the weekly. And the daily so far is still very good. That's number one. Number two is within the 120-minute chart, we made a peak F top at 108.86 at 15:30, at 3:30 in the afternoon, the 25th of February. And then we squeaked to a slightly higher high of 108.94. So that could be a G, or it could be a recycle. I don't know yet because the MACD is down. Stochastic's actually at 83%. There's a divergence here saying there's some internal weakness. Be a little bit careful. And I'm going to just set that aside. So all I'm saying is the parameters I'm going to be watching for on the QQQ series is a worst case in the next 3 to 4 sessions of 107.91 being tested, and a best case that there is a little bit of a peak today, or there's even a new high today, and then we go on to a leg C, peak C, and a leg D, and then a peak D into next week. So the weekly chart doesn't matter yet. Why? Because I'm really relying on the S&P. Let me do that right now. The SPX in the Chapman wave methodology, which has already made a peak D, just like the Dow, just like the diamonds, just like the diamonds extended leg D. No, diamonds are at a potential peak D. SPY at peak D. So what I'm doing here is I'm saying, oh, okay. And I drew this pattern in the other day. You remember I did it on the E-mini daily. I drew this cup formation when we were talking with one of our callers, and I said, this is what I'm going to draw now. I could be wrong, but I'm drawing it as a consolidation that maybe takes us into early next week, and then we start to the upside as the rotation only allows certain stocks to do very well, but the majority are starting to show some weakness, and then you suddenly get that up spike, and that says that all of next week, you see this doji candle in the weekly chart? Look at that doji candle. If there's a price point next week that goes under 209.75, that's like 130 points in the Dow down. Gee, I don't know what's even going to take us down 130 points. That says we could make a nominal peak next week and then a slightly higher high the following week. And then we got to watch out because it's leg D and it's struggling to do, although it's holding very well. We've had one of our best months in some of the indices in February. I'm looking at this and saying, okay, where could there be sector rotation to take us down quite sharply in March? And now I'm going to go back to the IBB and show you something. I'm going to also include the stock that Sam just asked me about, CGMO, and say, the IBB has made a peak B, a double top. It's really a little bit like a triple top at 341.46, 341.49. Oh, my goodness, I didn't see that. We've gone to C. Oh, that's so much better. Good. We're moving along. So I'm looking at this, and I'm saying, okay, the IBB is getting close. It's working so hard here. The stochastics at 90%. The MACD is good. The last few days should not have shown the sideways move. We should be climbing higher. Look at the doji candle in the weekly chart. I'm looking at this and I'm saying, okay, it's getting closer and closer and closer to some kind of a rotation that says, I don't know what it's going to be. It'll be some announcement. It'll be one of the biotechs, maybe two of the biotechs that just come out with some bad news, just bad news. And they'll say, it's just for the moment, we'll be back on track at the end of the year, whatever it is. I don't know what it is. And when that rotation takes place, that's where we're going to look at to see whether the XLF, which is holding really well, but is not showing any real sign of leadership. And I've had this left side, right side price time match a little bit like the stock we were looking at, J&J, which says round about the week of the 9th of March, the XLF should be climbing higher, but it's got to pierce this Chapman wave resistance line. Wow. which first of all has 2484, and then it goes all the way to 2494. It's a tough one. In fact, I should be raising it like that right now. Go to the low. There you are. So that says this is the resistance line that we're looking at. So that means that maybe as we go into the end of next week, when the market's starting to come back, this is if I'm correct, because all you need is just a pop-up above 18,244, I think it is in the Dow, and you've recycled the weekly chart. But that says that this whole conglomeration of action here, the sideways move in the leg, body, and then we were waiting for the neck and the head to form, coincides with the weekly chart having made a peak P. It's the only way I can count it. Hasn't been a peak P failure, but underneath it, I've got a gray A. I could have an inside Chapman wave, A to B, pull back, and then whoosh, we scream past 2514, the XLF, the S&P Select Financial Spider, and we zip right up, and we start a combined leg C, and that says that the XLF might have a very sharp pullback with the general market in March, but it could take us to higher highs into the summer and early fall. That's kind of my thinking, okay? Now, I said I'd do some of the work, and that says that the XLF has to hold 2420, certainly the low bar of 2407 made on the 20th of February, because if it takes that out, then I have to look at it and say, gee, that's an H pattern. That's not a very positive sign. So we've got one step at a time, and all I can do is do this in relation to the VIX index, and the VIX index stuck in the 13s, maybe even going to test the 1290, 1286 low of the 25th. That's going to be a clue to me that, hey, don't start shorting yet, because this market is still way too strong. Look at the sudden bounce that we got now. The S&P is up 0.85. The Dow's down just 19. Buying just keeps coming in, but it is the end of the month, and you should have seen a better Thursday and Friday. But you've had a spectacular February, so maybe you're just looking at some tiredness here. And that's the tiredness I think is going to carry through into next week. Hey, obviously I could be wrong. Now, had a question, two questions. One is that I was looking at the S, of course I've already forgotten the symbol. Where did they go? SGMO. SGMO is in fact Sangama. Yep, Sangama Biosciences, and it's trading at 16.45. It's down 42 cents. Now, I'd say the IBB was in leg C, maybe making peak C. This is in leg B on the upside, but being at all-time highs, I have to consider that it is a B and that it should go to a C and a D. The weekly chart is in leg D, and the monthly chart is really in a recovery A to B, having made a major peak E-top at 2469 back in March of 2014, a year ago, and then it plunged down to 939. So that's quite a hit, and now it's in the recovery process. It should make about a 50% recovery, and that should take you to about 1830, somewhere around there, 1830 to 1915, somewhere around there, $9.15. So hey, Sam, if you're long, it's looking very good, but be prepared that it could have a little bit of a pullback over the coming few days. But there's a good chance the moment it takes out 1736, the high of the 26, then the target would be 1781 to start leg C to the upside in the daily chart. A break under 1546 says you're going to have to hold on a little while longer. But so far, it's looking very good. Now, other thing I was going to talk about is some stocks. I was asked much earlier on about Google. So Google is at a fabulous leg D in the daily, 563 up 815, had a low bar. It was a restart, so it started off. So 489 round number low, 487. So this is the start. This is really the ups there. So we've got peak A. Then he goes, pulls back, and it goes A minus, and then another little A right there. So it goes A, B, C, and it's in leg D, looking very good. And the key support is 551 over the coming 3 sessions. The weekly chart is just a rebound. I have to look at it as a retracement failure mode. You remember, it's not a negative, it's an explanation. And it's saying that there's a left side, right side price time match. But the only thing I can do is say that buy Wednesday to Thursday of next week, the big challenge is how can it get to 581, which is the round number high of the week of the 10th of October. So far, very good. And I would really say on the weekly chart, the support, 553, 552, that looks like good support. Monthly chart, it's just very good. It looks like it wants to climb higher. The MACD and stochastic are not that good, so it's doing it on the propulsion of the torque from the daily, which has helped the momentum in the weekly chart. Monthly chart is just a retracement at this particular point. Looking good, but to say that this pattern, which has a down channel, it says that until Google actually breaks above right there, it breaks above. Just using a very simple technique. 585, the monthly chart is just in a retracement, and we really have to do it on the shorter term time frames. So the next question I had was, let me just skim the den. I had an email, let's see. Don asks, Basil, your thoughts as to where you think Met is going. This stock has been very good to me over the last few years. MetLife, last trade, 120.15, purchased 1,000 at 48.79, and then I sold 1,000 at 50.84. It's a very nice gain. Congratulations. And it's right now at 51.23. Okay, I'm pleased you brought this up. I don't know why I do not have my notations on this. I even remember just a couple of months ago redoing it again. But I think that the notations that I'm putting on now should be pretty much permanent, because they've done a lot of work at TradeStation, and it's now very much more robust for my technique than it was before. There's the D. Oh my goodness, that's EF, makes a peak E, and then it goes to, oh my goodness, this is very interesting. MetLife, remember we spoke about Johnson & Johnson just a short while ago, and it made a peak F in the monthly chart. The ugly candle of January really was ugly. And now it's the same thing. It's rebounding. It's trying to tackle the 9-period exponential moving average. The technicals are not very good. So let's look at it in a weekly chart formation. MET is the symbol, MetLife, various forms of insurance. And, oh, yes, I will do the restaurants. I plan to do that. So this is what I'm looking at. Oh, I don't know if I have time to do that right now. I was going to notate that. You know what I'm going to do? I tell you what I'm going to do. So Don, looks like you're out and you're looking to get back in. The weekly chart holding above the 9 EMA is a good sign. It keeps making these arch formations and then lower lows and lower highs. That makes me a little bit worried. But if I look at the daily chart, this pattern here is a pattern we've seen quite often lately. Let me just show you. The low bar of the 30th of January at 46.10 has gone to peak 25.26. Oh, you got to be careful. So that's a, yeah. Wow. What do? You see, I'm looking at the 200-period moving average as a magnet because it's gotten so close at 52.01. And it's had a tough time. Yes, I know what I'm going to do. Because there's a break right now, it just gives me the opportunity. I like to do a little work on this, and then I'm going to run through, if I can, some restaurant stocks, which was a request that I had. And I'll be right back. Basil Chapman, Tiger Editions Hour. Before the weekend, this is one of the few times I'm actually saying, oh, thank goodness it's Friday. Normally I'm like, I love it.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. The Art of Timing the Trade charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. The Art of Timing the Trade charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com.
Learn about good health and fitness. Living a primal lifestyle with Nico and Paige. Next on TFNN.
Hi, folks. We're back. Just real quickly, let's see. We've got a question here. Email. Hi, Basil. Can you look at UNG? I just want to say, I don't see anything in UNG just yet. I want to see how the 1350 level holds. If it doesn't hold, it's going to retest the lows of 1320 to 1312. So I wouldn't be doing anything with UNG just yet, but there is this H that goes to an M pattern. I'm showing you the weekly. That's probably what we're going to be looking at. Let's go to our next caller. We've got Scott in Safety Harbor. Hi, Scott. How are you?
Great, Basil. I'm just on the edge of my seat here with BAC. Just don't know whether to get in or not. It's down to 1573.
Yes, I've avoided it because you know how I look at the peaks in the Chapman wave methodology, and I go to when you get to the peak D, you can expect something's going to happen that you got to be a little bit careful about. And then I had some a subscriber request because I've been talking about buying the XLF, and then I said no, I don't see enough on the upside. Number one, and number two, I think you have to hold off. I think it's the next phase the XLF is going to work. So Bank of America yesterday yesterday gave me a clue that probably I'm right, that the XLF needs to do a little bit more testing. And of course, Bank of America is a good part of the S&P Select Spider Fund. Can I make a recommendation here?
Yes.
And the recommendation, you don't have to obviously listen to me, but I would say just, can you hold off a little bit? Maybe wait until Monday afternoon or Tuesday. It might even be Wednesday morning.
Are you looking for the 1550 at that time?
I'm looking for a test. Just remember, I'd spoken about this gap between 1561 and 1549, and I think it's going to go right in the middle there, and that's going to hold. And if it holds, then you've got yourself a nice bounce. First bounce goes to 1618, but I don't know on a weekly basis if this is the move in the XLF that is going to take you. I want Bank of America to go to somewhere in, it's at 15.74. BAC is the symbol, down 30 cents at 15.75. I want to see it break above 1660 and then break above 16, the peak that was made at 1679. I want you to hold there, and all of a sudden that weekly chart is going to look so much better, and now you've got yourself the same kind of play that you had for so long, where you could just keep buying in the morning and just keep taking your profits.
Let's move to Gilead for a second if you got a chance.
I got just a moment here, and let's do that as we're going to the final.
We've talked about it many times, and even though it's pulled back from the 104 range, I just see a real foundation built up at that 103 level, and I'm looking for just a gap up at the next time. People are very unsure about it, but yet
this is almost the same thing. I'm not as sanguine as you are in the weekly chart of the of Gilead. I think there are others that are doing really well. My concern with Gilead is that resistance line, we spoke about that, is still very strong. It's sitting in the 9 period. Here again, I'm going to say, here you don't have to wait so long. I would just say by Monday at 2 o'clock to Tuesday at between Monday at 2 o'clock and Tuesday at 10:30, you want to see it up in the 103.70 area, or at least
the 105 is just a tremendous wall for Gilead lately. I'm not sure why, but it just doesn't like 105.
Yep, and it has to hold 102.30 to 102.60 to 102.30. If it breaks that by Tuesday morning, I'm going to say, don't get this off your list, at least for a little while. Okay?
All right. Thank you, Basil. Bye-bye.
And thank you for calling. Always appreciate that call. Scott and Safety Harbor. Okay, folks, let's just real quickly, as we're about to break, and we're going to go to Nico and Paige. There's the pattern that I'm looking at in the down with that pullback. I think the pullback can last a little bit longer. I just have to tell you that if by the end of the day we make a new recovery high, that is extraordinary. I don't think so. I think we might have to wait until Tuesday or Wednesday of next week to make some kind of a low, and then it starts moving higher. Meantime, the VIX is not giving us much of a clue, but if that VIX starts to break into the 1450 to 1510 level, the market will pull back. Hey, thanks for being here. Have a wonderful weekend. Check out my opening call, my daily news service. Go to the front page of TFNN. And thanks for being here. Have a great weekend.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.